All right. Hey there. Good. I guess it's good morning, guys. It is just a bit after 11 a.m. Central Standard Time here on Friday, the 8th of March, 2024. It was jobs day. We got a bigger number than expected. Let's see here. I don't want to say the wrong thing here. Yeah, we were expecting 200,000. We got 275,000, but we also got a downward revision. Remember, last month had the big surprise to the upside at 353,000. That got revised down to 229,000. So, this revision down every month has been something that's been going on since probably around COVID, I guess. The BLS says, hey, they're getting less reporting. By the time they release, they've got to release the numbers. So then they have to go back and chase everybody else down. But, it is what it is. The fact is we'll probably see this revised down lower. But as for today, anyway, it gave stocks a big push. It gave the DXY a drop. And, of course, we saw Bitcoin breakout rally, hit a new all-time high. Coinbase apparently went down again. It worked fine for me. I logged in. It worked fine for me. Not that I necessarily use it, but I do have an old account there. So it did work for me, but other people are saying it did break down, kind of like it's done the last couple of times we've hit the all-time high here. I don't think there's anything nefarious going on at Coinbase. I just think their tech really sucks. I don't think that they've upgraded it as they should have. So anyway, we're going to talk about all that there. Take a look at some stocks. Take a look at the DXY. The title for today's show is Bitcoin to 100,000 by halving. And I'm going to tell you what I think about that. I'm going to show you some things because people are freaking out now saying this is a double top. And we'll explain why it's likely not. As far as a few other things there. Real quick here, guys, we are doing, for those of you that don't know, we have launched a new monthly subscription service. So, we do group coaching that you can get for 3 months, 6 months, or 12 months. And that's underneath the video here. But you can also now get more like a do-it-yourself with one group coaching class each month. And that is underneath here for a lot. It's pretty inexpensive there. But anyway, it's our C3 subscription service. Stands for courses, charts, and community. It also gets you access to our hot takes. Our hot takes, things like Cody, COTI there, which I posted back there at the end of October. And had you gotten in, you would have been able to ride it up over 500% so far. And we have many more stocks and cryptos like that. Their hot takes are just like the best, the most likely, nothing's ever guaranteed, but the most likely setups to really give you some returns, especially over time. Some of them pop quickly though, and then you get just like stupid returns pretty quick. But we have things like Doge on there, which just had experienced a good rally. Uni, we were in on that. I don't even know how many other ones on there. Mask, we got in right before it did a good pop. Other ones as well. And of course, like I said, stocks in there too. So you get access to that as well as the education. But I'll tell you what, guys, if you're tired of losing money consistently, if you're tired of not understanding how and why markets move the way they do, if you think the reason why we didn't just continue flying through the all-time high today was because of Coinbase, then you need to join us, guys. You need to join us because you're going to find out there's what everybody thinks. There's even people that have been around forever and a day don't really understand how and why markets move the way they do. And it's why I've been pretty consistently correct. I'm not going to get it all right. We're never going to get it 100% right. But if you guys have been following me for the last year and a half, nobody's called more bottoms. Nobody's given greater profit returns, consistently. So anyway, we'd love to have you there, guys. Who all is here already? Let's see. Revy, what's up, man? Yeah, I noticed who you were. I noticed who you were over in TWC, man, with what you wrote there. Peter, good to see you. Data, what's up? Soren's here. Bamboo, what's up, man? Since you got some time today, figured you drop by and say hello, man. It's been a long time. Good to see you checking in. Martin, Frank, Thibaswani's even here in the cheap seats. Mr. Roses, what's going on? Checking in from Argentina, man. Argentina, wild times over there. Oh, man, the world is watching, man. The world is watching. Does austerity, is it actually going to work? I guess we'll find out, right? He says, never been a trader while Bitcoin goes into price discovery, uncharted territory for me and many, I guess. Yes, sir. Yes, sir. Sats, what's up? Kimasabi. Allison, hello. Good to see you. Glad you were able to catch a live stream. Matt's Trades. Mav, what's up, man? Look at this. Mav's here as well. Man, we haven't seen Mav in a bit. Bamboo in a bit. These great guys, man, with TWC. But anyway, so yeah, what a day, right? I wouldn't read too much into, as I was saying at the beginning, into the jobs numbers. Again, they've been consistently revised and revised quite big. You know, that last month where we got the 353 was a huge surprise, right? It was like 200 or 217 was the projected, right? Was the expected. And then we get it revised right back down. Now, interesting. Let me see here. The underemployment rate popped up from 7.2 to 7.3%. Labor force participation rate stayed even there at 62.5%. The unemployment rate, though, went from 3.7 to 3.9%. So you want to watch that. That's one of the big things you want to watch, guys, because we have been historically low for a long time with the unemployment. If you guys have been following me for a while, you know, a while back, I thought, man, we were down here around 3.5, 3.6. We weren't going to stay down here for a while, and because it never does, right? So many things are different this time around, in case you guys aren't figuring it out. So now we finally get this push up to 3.9%. It'll be interesting to see if we continue to see some follow-up higher as the months go by. But yeah, so non-farm payrolls, again, surprise at 275,000 added jobs. We were expecting 200,000. But again, I do expect that to be revised much lower. I don't know. Will it be below 200,000? I don't know, but it should be revised decently lower by the time next month rolls around. Is NVIDIA done? Barbara wants to know. I don't think so. I've still got that $1,000+ target on that. If I get a chance here, I'll pull up that chart for you guys as well. I know I'm going to screw up your name, and I'm apologizing in advance, but I see you saying howdy. So hello there. John Ria. Oh, man, I hope I didn't screw it up too bad. Sean Skizzle, what's going on? Yes, as Fibaswani says, guys, as he's saying here, do me a favor. Whoops. NVIDIA pulling back nicely today, Troy says. But as Fibble says, drop kick that like button. So yeah, guys, before I get into this, hit the like button, share, please. I've got a lot of people starting to follow me recently. And I would love to see more, because those of you that follow me know I'm not trying to get you guys emotional. I'm trying to get you to understand what's actually going on. And, you know, in the markets, not just Bitcoin, but in the markets in general, what's going on with everything. So hit the like button, share, comment. I'd love to hear from you guys. If you're a jerk, if you're just an ass right off, guys, I'm just going to block you and kick you. I don't care. I don't have time for it. I don't have to, right? It's my channel. I get to do what I want anyway. Mark, what's up, man? He says there's gonna be time for SHIB USD. Any time frame? Your stage? Maybe. Let's jump in here and see what we got, those guys. Let's go ahead and get going here. So let me get down here. There we go. And let me bring this out a little bit here so you guys can see more of the chart. Doing my best to show you guys everything I possibly can here. Let's see. And let's get you up here a bit too. Why is that not going any higher? That's crazy. Let me see. Can I bring it in some maybe? There we go. Thank you guys for dealing with me for a moment here. You know, as I'm trying to get as much on this this screen as possible. I know a lot of you guys are looking at your phones and whatnot, and you know, I talk about a lot of stuff on charts, and you know, it often be a little bit smaller to look at there. A little bit further in here. All right, I think we got it. All right, guys. So this chart right here, I posted this recently on Twitter, and I posted this chart because I want you guys to understand some things. Okay. Let me see here. Gordon, what's going on? Thank you. Says awesome TA. Sean Skizzle likes TWC. I like that. So what do we have here, guys? This is the weekly chart. By the way, I didn't even know this chart existed. One of our students actually during one of our group coaching students during one of our price action sessions last week alerted me to this chart, okay? This right here is the Bitcoin all-time high index. So if you come up here and you type this in instead of the BLX, all-time history index right here, use this one. The BLX is what I used to use, but that updates at the end of the day, and it's only the daily and higher. This is all time frames, updates instantly. So you get a good, you don't have to wait, especially when Bitcoin makes those big moves during the day. You don't have to wait, until after the day where you can get that. Okay. So what do we have here? Well, the first thing is everybody wants to say this is a double top here, right? And I think what they're thinking is, Eve, and then Adam, right? So an Adam and Eve double top or double bottom. Basically, Eve is a wide bottom, has more time across. Adam is a sharp bottom, or in this case, top. Okay. And so I think that's what they're probably trying to say. This, I want to tell you, is what I believe is the real double top here. And as you can see, based on the height here of this double top, right, the target was actually down here around that 12,000 change area. And as you can see, we didn't quite get there. We got to 15.5, right? And I think that's why people are still so bearish. But you know what, guys? I got to tell you right now, if you have been bearish this entire run up, at this point, just shut the hell up. Can I get an amen on that? Because I'll tell you what, it's nonsense. It's been nonsense. And you don't get any additional points if price turns down here. You were wrong from $15,500 to $70,000. Shut the hell up. Shut the hell up, right? Now, I'm a little bit passionate about this, guys, just because, again, nobody knows for sure. Nobody guarantees what can happen, right? But you have to understand at some point you go, listen, I can't keep doubling down on the fact that I've been wrong, right? It becomes this sunk cost bias, right? The idea that you've been wrong over and over again, and you've put so much effort into that, it's making you wrong that you have to be right. You can't just get out of it. And it's, I don't know people personally that have been doing that, right? But guys, that doesn't help you any, right? That doesn't help you any. It doesn't help when they say, listen, top, all the way up for 12,000, and they're still talking about it. Okay? The same people that keep shorting before there's confirmation to short. Okay? So, when I look at this, here's the thing. If this is going to be a double top, here's the first thing, guys. In order for this pattern to confirm, price must drop here below this swing low here, 15,473 or so. So you can say double top all you want here, but until it gets down here, it can do anything else. Okay? That's the first thing. Second thing is, if it is, again, like we did previously there, you're going to have to pull down this thing here, right? Now, I've got this on the log chart. And if, to be correct, there's no reason that you should be stopping at 12,000. If this is actually a double top, which isn't confirmed until you get a breakdown here. And by the way, just because you confirm it on a breakdown doesn't mean it won't invalidate and break back up. That's just when you're doing patterns like that, that's what happens, right? You would be looking down here toward 3,500 as your target. Back down here around the 2018 bear market swing low. So, one, if this is going to be a double top, it actually has to break down below 15.5 before you can even jump around saying it. Two, if it does, stop with your 12,000, your 9,000 nonsense. Stop with your 6,000 nonsense. You're actually looking down here toward 3,400. Okay? Does that make sense? So when you look at it that way, right, when you're trading, if this is what you think, there's a crap ton that has to be done here, right? But here's the other thing. People that are doing that usually don't have Elliott wave, right? They don't really know how to do Elliott wave, right? And so if you do know, okay, Peter says he'd buy every bit there at 3.4. Yeah, I know. I hear you, man. You, me, Gary Cardone, man. We'd be there doing it, right? But here's the thing. If you're doing Elliott wave, so Capo's big thing was, look, 1, 2, 3, 4, 5. Okay. Now, so this is what he was saying. So part of the thing, he was trying to show you all these different reasons why this had to be an ABC up here, right? So he was saying, okay, that's that. And this is A, B, and C up here. That's what he was saying, okay? Now that we've broken out above, it can't possibly be. But he obviously doesn't actually understand Elliott wave, right? Because if you did, this is actually what you were looking at. This is called a flat correction. Okay? What that means is what you have here is 1, 2, 3, 4, and 5. 1, 2, 3. ABC down, ABC up, and then 1, 2, 3, 4, 5. That is a flat correction, which also just so happened to retrace 50%, almost to the T there, of wave 3. 50%, your initial wave 4 target is a 38.2% retracement. Secondary target is a 50%. So there you go, right? So now we're rallying up. And I'll give you a better count here in a minute on this rally up, okay? What else do we know? Well, again, so these are things we teach, right? These are things we teach at TWC. And not only do I teach these things separately, but I teach you how to use them together in a way that's going to make you a lot more profitable. Dark Slayer says, great content. I've made money since watching you and Fibbo and using pivot points. I love it, man. I love pivot points. What'd you say? You help keep me hold of my emotions? Man, that's what it's all about, right? That's what it's all about, guys, because your emotions are what's going to kill you as a trader. So not only do we have the count, right, but then we have accumulation here as noted by the price action and volume. Now, I've gone over this many times before. I'm not going to go over right here, but this is accumulation. This is what we call a jump across the creek. You got your show of strength, and then it becomes a back up the edge of the creek, which is a reaccumulation range and the rally out. You have another reaccumulation right here, rally up. You got another reaccumulation right before the breakout of this long-term resistance here, right? You've got this channel off the bear market swing low there. We consolidated right below it, and that's right there at the R1 pivot on the weekly, and we broke out impulsively through it, and now we're halfway up to the R3 pivot. Now, here's the other thing, guys. Let me tell you something real quick here. This is free. I tell us all the time. One of the biggest things you can learn if you use pivot points correctly, okay? This price action setup here, where you move in sideways, you kind of rally a little toward the R1, you come back right here. You're not even coming down to the pivot, right? And you get these big candles, and then you start getting this big volume and big candles breaking out through the R2. This setup right here almost exclusively will see price rallying through the R5 pivot. So if this is a double top, how does it get to the R5 pivot? It doesn't. But again, these are things that people don't know that you learn, right? Again, this is something I've given out for free a lot of times. And once you learn it, once you see it playing in, multiple times, you'll be like, holy crap, this is amazing. So now here's the other thing. Again, we had this impulsive breakout of the channel resistance. Price action wise, guys, when you get this, most often it continues to rally, right? And a channel is just like any other pattern. So what do? Well, because you're breaking out of it, measure from the point of breakout to the bottom to the support on that, right? Put it right here. And that gives you a pattern target up here of around 88, 90,000, 86,000, right? That's not where it has to stop. It's just a pattern target based on the height of that pattern, which is what you do with patterns, right? If it's, again, as you see here, to double top the pattern target, it's based on the height, right? If you look at this as an inverse head and shoulders here, here's another thing I haven't even talked about, right? Look at this right here. See this? And I'm not a big fan of, inverse head and shoulders just because they're so easy to screw up. But in this case, pretty legit one, right? You rallied up, you got a nice impulsive breakout, you came back, retested the neckline as support based on the height of this left shoulder, head, right shoulder, right? Based on the height there, you have a target. You had a price action target here, pattern target. Let me see if I can get it here. There we go. Of up here at around 41,000, which just so happens to be the support. We broke out above, found a support here, wicked down once into the EQ of the channel, and then rallied up, right? Here's the other thing. Everybody says, oh, well, RSI and Stoke RSI, they say, is so high. The 2017 breakout in 2020, okay? What did we do? We rallied up. We pulled back 1 week. Let's see if I can zoom in here a little bit for you guys. We pulled back. Well, from the previous week's high to the next week's low, okay? That was about, I've got that a little bit off there. It's about 12.3%. And then we took off through the all-time high, right? You can see we kind of wicked out above it the first week, then we pulled back and we went, right? Okay. Right here, as we get to the all-time high, right up here, right? Wicking out above it. We'd pulled back, and then, of course, we're wicking out now, but about 15.9%. So what I'm saying is and at the same time here, look at the RSI and the Stoke RSI. We're doing the same thing here, overbought, except Stoke RSI over here had been out for like a month, 4 or 5 weeks already before we hit this point. We're just now, had been topped out. We haven't even topped out with our Stoke RSI yet. So don't tell me that RSI, which is about where it was over here before we broke out, or Stoke RSI is too high. That's what happened here. And then look at the rally we did. Okay. So just some things I kind of wanted to talk about here, guys, because, otherwise you have people out there. People say TA doesn't work because you have a lot of bad takes, right? Or you have people that use a specific form of technical analysis that doesn't give, that isn't usable for price forecasting, that isn't an understanding of market dynamics or really market participants' emotion. Okay. Elliott wave tracks emotion. Fibbo's threshold theory attempts to track emotion. Okay. Fibs tend to track emotion. Okay. So that's what you're doing there. So when people, come out there like Capo or I don't know, you guys keep telling me Gareth Soloway. Again, I've never seen him. I've never watched anything of his, but you guys keep telling me he keeps being short. And all I've seen are the clips, and the clips seem to suggest again that they're using, it's not that the TA they use doesn't work. It's just that you're going to get a lot better results if you understand price forecasting, if you understand how and why markets actually move the way they do, which most people you'll find out online don't. Okay. Most guys, the reality is most traders really don't. Okay. This is the thing. But here's the thing, even with these individuals, you don't understand their risk management, right? So, or even mine, right? A lot of times, unless you come through if you come through TWC and you go through our risk management, you're going to understand our, the way that I do risk management. And I'll tell you what, the way I do it is absolutely just beautiful. It just keeps you in profit consistently, and it keeps you from losing a lot of money one time because you're not over leveraging, you're not over positioned on your sizes. You understand, you're risking very little and getting a great return on the little bit you do, but it allows you to take multiple trades. Many times you guys are out there, I see you and you're like, oh man, I have no dry powder left. Oh, I don't have any money left to do into this trade or into that trade. And the reason you don't is because you're not using proper risk management. Okay? This is the reality check. But you don't know that you're not. When we first come in as traders, we think, man, how can I turn this little bit of money I have into as much money as possible, as quick as possible? And what you end up usually getting is you lose that money. Okay? You lose that money. But you double down on it, right? It's like the people who continue to say the top and we're going 12, as it continues to go up, right? That sunk cost is what's going on. And you find it difficult to you're like, man, it's got to work. If it just works this next time, it'll do it, right? You end up revenge trading. You lose even more. I have posted comments lately from some of our students. I had one who just passed not one, but two prop firm exams, right? Challenges. See, he now has two $50,000 accounts that he gets to trade with. And he keeps like 85, 90% of the profits. Prop firms are notoriously difficult because the risk management that's required to pass them. But because of what he learned with us, according to him, because of what he learned with us, this is what allowed him to do it. Two accounts, guys. You don't have to have a lot of your own money out there. If you understand how to trade correctly, you can go past these prop firm challenges and you can get access to using their money to trade like he did. Imagine having two $50,000 accounts that you get to trade with day in and day out, and you get to keep 80, 90% of the profits. How amazing is that? But most people fail because they don't understand proper, stringent risk management. So this is why I tell you guys all the time. This is why I talk to you about it all the time. Even if you're not in there with us, you need to understand the importance of risk management because you will not get the results that you're looking for. I know you're looking for results. Why? Because you're sitting here listening to me today and you come back week after week. I know you're looking for results and consistent results, and you're looking to build that wealth, build that equity curve. You won't do it if you do not take proper risk management seriously. It is the number one most important thing you're going to do day in and day out as a trader. Okay, guys? Seriously. But yeah. I had another student here who just recently had I just posted it there on Twitter. Had the absolute best trade of their life, almost a 16R return for a Doge trade. That means they made almost 16 times what they risked. That's your real metric, not your dollars, guys. You come out and say, oh, I made $10,000 on a trade. And I say, so? How much did you risk? What was your risk? Because the fact is, most of you guys, you're going to get lucky if you do something like that. Maybe you used $5,000, maybe you used $10,000 to get that $10,000. But if you do that consistently, you're going to lose a lot more than you're going to win, and you're never going to make it. You're never going to make it, I promise you. But if you risk this much and you're making 16 times that, guess what? You do that consistently, your equity curve looks like that. That's the truth, guys. Okay? That's the truth. So anyway, so this is kind of what we're looking at here. We've got lots of things going on. Different ways of looking at this, whether you're looking at pivots, whether you're looking at the impulsive breakout of the ascending channel, whether you're looking at the Elliott wave counts, whether you're looking at the breakout through the all-time high, whether you're looking at similarities with the breakout above 2017 in the indicators, all these things suggest that ultimately price is going to go higher. But I cannot, okay? But I cannot guarantee you that anything in particular is going to happen. Okay. Somebody asked me here, do you ever use breakout, retest, resumption techniques? Yeah, often I'll look for a retest. More times than not, I look for a retest. Sometimes I don't. One was this breakout over here, which if you guys were following me back then through this reaccumulation range here, you'll remember everybody was expecting to pull back. I said the likelihood was that we wouldn't because we had 6.5, 7 months of sideways before we broke out. And I said most likely we would just do this reaccumulation as we were rising. And that's what we got. The other time I didn't was this right here because we were consolidating just below this ascending resistance, just below the R1 pivot here. And so for me, the breakout was the thing there. Most of the time, though, I will look for a retracement, a retest of that breakout range, that breakout area, potentially before going long. But a lot, again, it really just depends on what we're looking at, what the structure is at that time, what's going on, and this is all that kind of stuff that you get if you come in, to TWC and you pay attention and you learn. That goes on there because I don't, guys, listen, especially in the group coaching, I don't hold anything back. I give you guys everything I know, all my secrets, all the things that I've learned over the last almost 30 years. Everything is there for you, especially in the group coaching, which is why it makes it so valuable, right? Look at Mark here. It says, I just finished 1 year of trading to break even because of the risk management that I teach. Yeah. I mean, this is the reality, right? And there's a difference between price and value, right? Sometimes people go, oh, well, it's so expensive. But yet they're sitting there losing $5, $10, $15,000 while they're trading. That's the real expense. There's price and there's value, guys. Stop. As long as you continue to focus on price in your life, you're going to have a lot of trouble going forward. You have to recognize when value is different than that price. Okay. And then, approach it accordingly. Okay. All right. So anyways, this is what we're looking here. Let's kind of jump into this count here. Here's what I'm looking at right now. This is my account. Okay. So for me, I think we're getting overextensions here. I think we've got this 1, 2, and then we've got 1, 2, and then locally we've got 1, 2 into 1, 2, giving us this as we continue to get more and more vertical, right? So if we do this, okay, that means this. Let me see here. If we look at this, let's kind of do it this way. So if we go 1, 2. That gives us a 3 up here around 97,400 or so on this chart. 4 gives us a 5 at about 109, 110,000, right? But that is just wave 5 of 3. Okay. From there, again, and this is going to be, I'm not sure this is going to work exactly like this. If prices go more than what we generally expect them to do on the rallies and the pullbacks, then we can get, the targets can continue to overextend as they have so far. But anyway, right now, I want to do this because I want you to see something here. So 38.2 on that pullback will give us an 81.3, 81.4 area for a target, which will then give us 5 of circle 3 up here at around 131. By the way, if we pull back 50%, that target's going to be closer to 140 something thousand, but we'll just go with the minimum expected, okay? And then that would give us then, that would then get us, let's see, wave 3, again, pulling back for wave 4 here. So from around potentially 132 to 82. I'm not sure we're going to get that. I think we're going to see some overextensions, guys. But minimally, this will then get us to about 174, 175 for just wave circle 5 of 3. Which means we then pull back one more time. Because remember, wave circle 2 is way down in that 7-month sideways there, that flat correction. Way over here. Again, looking, so you're building this base over and over and over again around 80,000, right? If you're only pulling back to the 38.2. And you go, but Chris, this seems ridiculous. You're telling me, Chris, that we could look at 276,000 potentially? Oh, wait, let me see here. Yeah. Yeah, we get it up there. This one says 276, 650. Oops. And that, potentially, minimally, we could build it. Now, if these wave fours pull back further and or the wave threes overextend further, this target's going to go further up, guys. But Chris, that's ridiculous. That's ridiculous. It's so far. Well, okay, so it wasn't far to you over here when we went from 3,000 to almost 70,000. That wasn't far, right? But somehow, by the way, 3,000 to 70,000 is what, like 23 times? But somehow going from 15 and a half to 276, which is not even 20 times, is somehow doesn't make sense, right? What it is it's emotional response, guys, because most of y'all don't have experience handling that level of paying out or taking in that kind of money every day. So you're used to much smaller sums, maybe in the hundreds of dollars, right? Or even the thousands of dollars, right? So it's hard emotionally to get to that point. But here's the reality, guys. Can we get to 100,000 by halving? Month and a half from now? I think it's entirely possible. 97, 98,000. So wave three here, right? Guys, it's not even 50% rally from here. It's not even a 50% rally. But you're locked on this $100,000 number about it being such a large number that you can't emotionally let go of it and deal with it. And so that's what we're looking at, it, right? So yeah, so when we talk about this, I think you have to be careful of these things. Now, for me, again, unless we're dropping below this wave two here, right? Which on this chart, on this index chart here is 59, 173 and 92 cents. Unless we drop down below that, I'm looking up here at that 97, 98,000 area next. Okay. That's what I'm looking for. So now here's the other thing real quick, guys. I know I'm spending so much more time than I thought I would on Bitcoin today, but here's the thing. ETF inflows continue. Oh my God. The flows in general just continue to get larger and larger than the first day now. We're seeing increasing, continuing. Month and a half, almost 2 months in, it continues to expand. More money is going back and forth, right? With that, the inflows are continuing to increase as well. Yesterday, Fidelity had 400 and somewhat million inflows. They were the big dog yesterday. BlackRock only had 200 and some change. GBTC outflow was 200 and some change. We still had a net positive inflow day for ETFs yesterday of almost 500,000, 460 somewhat, or I mean of almost 500 million, 460 somewhat million. This is the reality, guys. And we are still just barely hitting the bottom rung of that level of wealth because the large RIAs are going to take their time. It's probably going to be right before summer, into the summer, before they decide to allow or they add the Bitcoin ETFs into where they're for their customers, right? Right now, we're getting like some of the retail, more of the retail ETF kind of or retail RIA kind of platforms out there that are saying, okay, this is the bottom of the number, guys. What do you think happens when the ultra high net worth are out there? And their RIAs are just putting it in automatically. You got people with wealth levels like Gary Cardone, right? Gary Cardone's a big proponent of Bitcoin. He just sold his home for two plus million. He's deploying that into Bitcoin, right? Bought 8 Bitcoin today. He's got some lower target, 61,000 some change. Bid set down there in case it does get down there. A man who's putting his money where his mouth is, right? Sold his house, well, one of them, and taking that money and putting it into Bitcoin. People like him, right? And much wealthier. This isn't about getting in and out along the way. This is, I'm going to buy it. I'm going to hold it for a while, which means you're taking more of the reduced supply off the market, making it unavailable for anybody else. You guys have to try and wrap your heads around this because not enough people out there are doing that. Now, what does that mean? Left translated cycle this time where we hit the top of the cycle, maybe like Q4 this year? Possibly. The other possibility is a super cycle, and this becomes the elongated part of an S curve that I've talked about, a technology adoption cycle. I don't know which one's going to be, but either case, we should be expecting over $100,000, guys, at least. I think all the evidence, everything's out there really kind of leads that way. We will see how far it goes overall, but right now, based on this is where we're looking. Now, we're looking for overextensions here in this third wave that continue to overextend. They might or might not. If we're breaking down, so we go back and we reevaluate. But here's the other thing. Minimally, here's another thing with Elliott wave, right? If this is the wave 4, then minimally, based on the height of wave 4, we should be looking up here at, let me make sure I've got all this set correctly here. Yeah. We should be looking at around 173,000. That's our general 5th wave target area. And this is something I use with you guys all the time. We're finding targets out there, right? So this is I do this here, guys. I'm not trying to get you emotional. I'm trying to get you to understand things that you probably really don't understand, right? Because I don't think any of y'all are ultra high net worth. Please let me know if you are. I'll have a talk with you and I'll hook you up with Gary. We'll have some good talks with you, okay? But if you're not, and you don't understand how that segment of society tends to invest, right? Then it's hard to wrap your mind around, oh my gosh, these larger numbers and when do these stop? I can see ETF inflows continuing to accelerate into the summer. Again, these large RIAs, these very large professional, these really large RIAs with your ultra high net worth individuals, whatnot, generally they're going to take about 90 days to do their due diligence. They want to make sure that the ETFs don't fall, right? Not all these ETFs are going to make it, guys. BlackRock's good. Fidelity's good. IBIT's looking good. But you got a lot of smaller ones that aren't going to make it through the end of the year. So these big RIAs have, especially if they're just allocating their clients' funds, they have to make sure that the ETFs are not going to fail, right? That they're going to do well. So there's like a 90-day period usually, and that's going to get them right till the summer. Then the summer they go, okay, look what's happened since we're done. Inflows continue to increase. Price continues to go higher. Yes, we're going to put our guys in it. These aren't guys that are going to take it out every time price drops down, guys. They're not traders. They're multi-year investments. That's what they're looking for. Okay? And so this will be Bitcoin that actually goes off and doesn't come back. So $100,000 by halving, I think, is extremely possible. I think it's extremely possible. When we get the real breakout, like the real push through the all-time high, through the 70,000 area, at that point, I think we're gonna catch a run. We're really gonna kind of catch a push. Now, Would I like it to happen before the weekend? No. Because the CME, that would leave a huge gap with the CME. And that would likely get filled. So what I would like to see is a pullback right now, maybe your mid 60s, or 63,000, 62,000 maybe. I would like to see that over the weekend, and then the real breakout happening on Monday. Because if we can do that, or Sunday night into Monday, right, when the CME opens. Because if we can wait till that time and do that, then we have that involvement as well. By the way, guys, all this, I haven't even talked about the companies which will be putting and which are starting to put Bitcoin in their treasuries due to the accounting rule change. A lot more money out there. And don't think there aren't companies that are going to attempt to do what Michael Saylor's been doing, be issuing debt and whatnot, and maybe shares of their company to buy Bitcoin to put in their treasuries. The end game for these folks is holding the Bitcoin. It becomes an asset on their books. Okay. So, Dark Slayer, you're looking for a promotion for what, man? For our group coaching? We just had one on the 29th. But I'll tell you what, if that's what you're talking about, send me a DM. We'll see what we can do, okay? Damasco saying copycat asset fund now that BlackRock is added to of its income funds. Yeah, that was my other thing. BlackRock is filing paperwork to buy ETF shares of the Bitcoin Trust for its other funds. Yeah. And like I keep telling you guys, this is only the beginning. This is how it works, right? So this is what we're looking at. Okay. That's a beautiful long-term, Elliot. Crypto Excel says, yeah, I like it too, man. I like it too. But remember, this is just if we get what we usually look for, 1618 for the, for third waves, 38.2 pullbacks for fourth waves. If we're getting any larger third waves and or any larger pullbacks on the fourth waves, that target's going to go up. So we'll see how it plays out. But right now, this is my game plan. This is kind of how I'm looking at it, and I'll adjust it along the way, right? Oh, you meant a promotion at work? All right. Revy says, by the looks of things, 100K before the halving is almost guaranteed. Yeah. Okay, guys, again, yeah, real quick here before I continue on here, man, hit the thumbs up, hit the like, subscribe to wherever you're following me at, whether it's Facebook, Twitch, Twitter, YouTube. And you know what? If you're somewhere, do me a favor. Repost the link, please. Share it. I have never been really great at promotion and marketing. I've really focused on just keeping my head down and doing the work with TWC through the years. This year's been my first year. I'm really kind of pushing it. So any help you can give me with that, I'd love to. Again, guys, you don't get emotional, takes from me. You don't get fluff. You don't get smoke blowing up your rear end. My focus is really on risk management and understanding helping you guys understand how my markets actually do move like they do and how they are not, how markets aren't really efficient, how they aren't random. They sure as hell aren't random. Okay. So that you don't think that today's inability to push through 70,000 was because Coinbase went down. Right. And that's what I'm trying to get you to do here. Okay. So let me see here. Let me kind of catch up here. But yeah, I mean, you guys sitting back here, everything else aside, again, just this pivots, this price action setup here, you should ultimately be looking at least to this 114, 117,000 area at the R5. If you don't believe anything else of what I've said, this particular structure, which I've shown you time and time again, multiple time frames, multiple charts, stocks and crypto and whatnot throughout the years on this channel here, right? It's the same setup here, and almost exclusively that's going to run through the R5. There's going to be pullbacks and whatnot along the way, but should be expected to go through there. Again, 100% no guarantee, but the likelihood is significant. Okay? If you guys are looking for guarantees in trading, you're never going to get it. The only guarantee you're going to get is that you're going to lose money from time to time, and the newer you are, the more money you're going to lose, and the more often you're going to lose it. Does that make sense? Okay. Let's jump ahead here real quick. DXY, still same chart, guys. This is still my big chart, my monthly. This is still my large count. Looks like a flat correction here, right? This suggests we're likely in a 1 and a 2 with a wave 3 down here at around 75, 5 waves down around 70, which takes us just below wave B here, gives us this kind of flat kind of correction. Okay. But here we are right here at that. It's the yearly pivot is what it is. It's the monthly time frame. That's why I refer to it as the monthly pivot here. If we get an impulsive breakdown through there, we should be looking down. The target you would look along the way locally would be this swing low here at 99.22. This S1 pivot at around 97.75. And then this ascending channel support. So I would expect a breakdown all the way through here, but along the way, look for the breakdown through those areas. Okay. Let's say we were to instead find support here and break out above wave 2. In that case, I would be looking for this wave 5 of CB here to actually target up here at around 125.70 before it breaks back down. That's what we're looking at as far as the dollar goes. And remember, if the dollar's coming down, that means people are taking money out of, if the DXY goes down, that means that people are taking money out of the dollar and putting it into more risky assets. So generally speaking, that tends to bode well for risk assets like stocks and crypto and stuff like that. Okay. Let me see here. Again, this is the futures for the Russell, okay, which is your small cap index. All right. I've been talking a while about this potential accumulation range here, which is what it looks like. We got just a very slight wick down below, which would be a spring and then a rally up, a pullback. And here we go, rallying up again. So based on the height here, if you're into the Russell, guys, based on the height of wave 4 here, wave 5 has an initial target of 2227.90. If this is 1, 2, 3, 4, 5, so this gives us a 1, 2, then this target will actually overextend up here to around 2347.70, which, as you can see, then gets us 5 waves up right around the swing high, which is what we generally look for. Guess what, guys? If that's 5 waves up prior to the swing high, we look for 3 waves back. That would be a 1, 2. We'll look for a 3, 4, and a 5. So again, as I've been talking about, I think small caps are where we should be looking, really getting interesting these days because of that index. It's looking good right here, okay? Let me kind of catch up with you guys here. Ethereum, nothing has changed. You guys have been following me, know I've been talking about the low down here since June of 2022. This is accumulation. This is the breakout of accumulation. This is the retest, the rally. Remember, this point right here was where everybody was so depressive about Elliot or about Ethereum. And here on the show, I told you guys, I said, pay attention. This sentiment right now, and we're not even breaking down. We're finding support on this long-term resistance because this is, look at this, support resistance flip from all the way back here in March of 21, April 21, right? The fact that we're not breaking down, the fact that we're just range bound on that, and that sentiment was so sour, so there's no reason for me to change my targets. I gave an interim target right here at 35.47. I've got it as a 1, 2, 1, 2. Wave circle 3, I've got this target up here at about 46.26. Same target. I've had this target up here since this low down here, since we've completed this wave 2 here, October of last year. If you jumped in at that time and you said, yep, I'm going to go with this, and you've held on since then, congratulations to you for being up almost 161% without having to sweat about it. Unless, of course, you were watching the daily chart. Then you were sweating because Everybody was. If you were online listening to crypto Twitter, you were sweating it because everybody was so bearish, right? Another chart in which people have been very bearish, and I told you guys to be careful on it, is BNB, right? So everything happened with what's his face there, CZ over there. Everybody wanted this breakdown here, swore to you that it was going to come on way down here and then eventually to zero. I said, not likely. I started charting this for you, remember? Look at this. This is beautiful. Look at this rally. Had you just waited for the breakout even of this descending resistance here at about $250 or so, price is almost 100% from them now already. You got to stay away from, you've got to understand how and why markets move the way they do. And when you're looking at social media sentiment, how to look at it and how to understand it. Otherwise, you're going to be sucked into shorting this here and here. You're going to be sucked into shorting this here and here. You're going to be sucked into shorting Bitcoin here and here and here and here and here. And not just for locally, not just for a pullback. You're going to be looking for 13, 12,000 or whatever as price continues to rally from 15.5 to $70,000. Guys, Bitcoin has rallied 351% so far, with people trying to short it the entire way because they don't understand. But they've got big accounts. They've got big followers, a big number of followers online. And you all, being human beings, you instantly think, well, there's a lot of followers, so they must know what they're talking about. Why would everybody be following them, right? It's just part of being a human being. But look what it does to you. Look where it gets you, right? That's why I'm so adamant about constantly telling you guys, this is not correct. That is not correct. This is what you need to be looking for. Okay? So that's kind of where we're looking with that. Let me see here. CLSK. I saw somebody asking for that. Miners, right? Everybody's freaking out about miners right now, right? I haven't looked at this chart in a bit. Let's see what we got. By the way, CLSK was another one of our hot takes. That was huge. I think the most recent one was this 1-2 here. So from around that $6-7 area, and it rallied up to $23 so far, right? Let me see what we got here. This looks like 1, 2, 3, 4, 5 potentially here. As you can see, it was just beyond the target at 2261. Let me see here. And that's a 50% pullback. Let me zoom in a bit. Let me see what we're looking at here. Oh, I like that. I like finding that support at the daily pivot. I can't get over. There we go. Yeah, see, it's looking like ABC. We'll keep zooming in a bit here. Yeah, there it is. ABC there. Oh, 4 hour. Yeah, so if we look at this as a 1-2 here, 2618 overextension for wave 3. What is this? 768, 764. There we go. 1, 2, 3, 4. 1, 2, 3, 4, 5. Yeah, so it's A, B, 1, 2, 3, 4, 5, C, and then A, B, C. So it's a WXY correction. Like I said, 50% retracement. WX, and we're breaking out above X, which means we should continue higher overall. Doesn't mean it happens today, guys. But based on this count, looks like right here it's 1, 2, 3, 4, 5. So this is a 1. You'll get a 2 on the pullback, 3, 4, 5 going through there. So locally, again, we have our 1, 2, 3 target up here at 61.30. We've got our 5 of 3 target up there around 104.50. Locally, this will overextend that initial wave 3 target there. Oh yeah, it'll take everything up here. Looks like we got a 3 up here at 119. 4 actually pulls back about 53 or so. 5 up at around 195. And these will just continue higher here. Continue to overextend. Now, what would make miners overextend like this, Bitcoin miners? As we get out here and break out their new all-time high. What would make it overextend? Bitcoin taking off, right? I mean, miners, again, they have their own thing because they're stocks, they're companies. They have their other little things that also add into how their price moves. But if Bitcoin, as long as their financials are all right and Bitcoin's mooning, you want to say, right? The word everybody uses. But if Bitcoin's taking off, well, guess what? You're going to see that in the miners as well. Okay? Hey, I appreciate you, Matt. Don't ignore you, Grace says. Listen, I'm not ignoring anybody. It's hard to read through everybody a lot of times, okay? So don't ever think I'm ignoring you guys. I do have a limited amount of time and I try to get through it, but obviously I can't get to everybody all the time. Lala, thank you for saying that. I appreciate it. Ethereum Bitcoin, though, that's the same chart I've been talking about with Scott. You guys know I'm on Scott's Wednesday shows in the morning before he started with everybody else, right? But every Wednesday morning when he shows on there at 8:30 a.m. Central Standard Time, 9:30 a.m. Eastern Standard Time, I'm on there with charts, right? We've been talking about the Ethereum Bitcoin possibility since, summer of last year. Before then, it looks good, guys. It looks good. Right now, again, it does look like it's 1-2 here. This gives us a minimum expected wave 3 target up here at 0.07574. The idea that this is a 3 and this is a 4, by the way, this looks great as reaccumulation here. If you're looking at price action and volume, that spring right there is really nice. Boom, right here. Breaking out impulsively above this yearly pivot here on the weekly time frame should have us rallying up. Wave 5, based on the height of wave 4 here, minimum expected target is 0.12888. So, again, not looking bad, right? Not looking bad at all. Grace says Ethereum's in a downtrend. Yeah, and we're working out now, right? If you're looking at market structure, the market structure off this swing high here, the last higher high was actually this one, or lower high was this one. You had a lower low, lower high, lower low, and then we broke out above it. We pull back. If we break out above this one again, that says that this bearish market structure is complete, and we have bullish market structure coming off the lows now. That doesn't mean we can't go up and break down further, but it does tell us that. That's what we're looking at, okay? So we're looking for a breakout above 0.06117060 on this chart. We can get that. That closes off this bearish market structure here. We head up, right? Now, if you want to look from this one right here, where you have a high, a low, a lower high, and a lower low, this bearish market structure is in effect until we break out above 0.08558649 here. Okay? But generally speaking, the price action and volume here looks really good for reaccumulation. Okay? I'm trying to zoom in a bit here so we can get rid of that bigger volume prior. See how this is. Notice what happens down here at the lows. Your volume's dropping off here on the decline as you get down there, right? Less and less selling going on. Down here in this range, this local range right here, support. You see how volume picks up down there? Support into this spring and breakout, right? What's going on here? Again, more large candle spreads compared to what we had here, right? We're seeing larger candle spreads. We're seeing expansion of volume. That's usually what we want to see in a trend. Looking for the trend. Okay? So, TA is not broken by anything. Look, and I'm not trying to give you a hard time here, Grace, too. I just need you to understand, like everybody else, that that's not correct. That is not correct, right? People act like, oh, this other stuff, because it's all of a sudden technical analysis doesn't work. It does work if you do it correctly. And especially when you use things which reflect human emotion. Elliot wave theory, you use price action and volume correctly. You use Wyckoff, which is price action and volume in ranges, right? Understanding what goes on there. When you use these things, you're going to get a lot better result than somebody out there who's just using, price action patterns, classical charting or something like that. Because the price action volume, the understanding of that, the Elliott wave, which is the reflection of human emotion, this movement between fear and greed that is predictable, right? It is forecastable. Doesn't mean you're going to get it right 100% of the time, but it's like a GPS. It gives you that direction. It gives you that understanding. At this time, it's different. What's different? The cycle is different. Yeah. Doesn't mean TA is wrong. My TA has been correct coming up through here. There's nothing. See, this is the thing. People argue about this. I'm not going to sit here and argue it, but I'm telling you right now, you're incorrect. You are wrong. And if that hurts your feelings, I hope it doesn't. But if it does, there's not a whole lot I can do about that, right? Yes, there's a wall of demand. And did you see my targets? What I talked about earlier? Right? So it's just understanding how to apply proper technical analysis to the chart. And the more your analysis actually reflects what's going on with human emotions and an understanding of how and why markets move the way they do, the more correct you're going to be. Okay? All right. So anyway, so that's that right there. Let me see here. Just kind of figure out here. Bamboo says Ethereum Bitcoin going higher, took out liquidity at the previous low, made a nice retracement, and now heading higher. Yeah, exactly. God, I got to get out of here real quick. Let me see here. What else did I want to show you guys real quick? Let me. Let me see. Is this the one I'm looking for? Maybe. Ooh, we get some reversal up here. So this is my bigger chart here for the S&P futures. And what do you notice here? So this was the wave 5 of 3 target right here. We popped out just above that. We have a throw over of the channel here. I'm watching this now. This is interesting. So we got a gap up here. This gap up is due to the contract change, guys. Contract switch right here, okay? Kind of like this one we had right here, okay? But this candle does not look good on the R1 pivot. If we start losing that there, we'll look for the EQ. If we lose that, we'll look for the channel support. If we lose that, we'll look for the pivot. But right now, this is looking like potentially wave 3 here. So 1, 2, 3. If that ends up being wave 3 there, which there's no confirmation yet, guys. This is a big wave 3, right? This is right here. But if it is, we'd be looking for a pullback toward the previous all-time high here. Now, I've got a 38.2, which would be the initial target right here at this low volume node at around 46.38. We could see something like that. The other possibility is we continue to push up higher here and we get a 38.2 closer to this area here around 47.90, which means we could see wave 3 continue to overextend to 55.39 and a quarter. But this channel here off this Friday, January 5th swing low is absolutely insane. Let me jump out here to the pivot, to the pivots here for the yearly. They're showing up here on the weekly. So again, all-time high right here. Consolidation before and then pop out through, right? The weekly looks like we've got further upside still to go. Generally speaking, seeing this like this, if we got rejected here, everything else out of the way, if we got rejected here, generally I would be looking for this area to hold the support right here around 47 again, 50, 4750 to 4800 kind of area. If we lost that, then I would really expect the pivot to hold. If the pivot didn't hold here, this pivot right here at around 4,500 or so, a little bit below that. If we got a rejection and that did not hold, I mean, we can still look here at the S1, but I would really be thinking this is probably the top and we're going to break down lower. Everything else aside, just based on the pivots and the way that I've learned to trade them, the setups, the price action setups that happen on there, that's what I'd be looking for. But right now, it does look like we may potentially, if we get a pullback, you know, we would be looking right here around 5,000, 5,030, maybe even 4,900, 49, what is that, 49, 49.60, maybe something like that potentially. But could see it going up there. If we lose that, then we'd look here. If we lose that, here. It's as easy as that, guys. You really don't have to make it more difficult. But right here, again, this could be overextending higher. And if it does, right now you see that's the 200%. The 2618 up here, 5750 would be the next wave 3 target. So that would be 5750 and 3/4 or so. For me personally, the idea that we hit a top in the Dow without touching 50,000, being this close to it, we're sitting just below 40,000, right around 40,000 at this moment, I don't think makes a whole lot of sense. Now, that doesn't mean price has to do what I think it needs to do, but I am looking for the Dow to continue up toward that 50,000 mark. And so if it does that, we should expect the S&P and the NASDAQ to continue and push out higher. Does that make sense? So yeah, so that's what we're kind of looking at there. So, you know, whether you look at this, if you're jumping at gold, right? Let me see here. Gold and silver. Since gold broke out, make a new all-time high, right? Something we've been talking about for a while. Here it goes. So this is the you know, again, the all-time high was right here. Right there, right? So we had the initial pop out and rejection. Look at all we did, guys. All we did. Everybody's freaking out about it. All we did is pull back to that area. That's all we did. Reaccumulation right here. Volume price action. This is called the jump across the creek in Wyckoff terms. This is the confirmation that this reaccumulation is complete here. Large candle spread, large volume coming through that. A lot of room left on Stochh RSI and RSI to continue up higher. This local 1, 2, 3 has a minimum expected target of 2261.50. This larger 1, 2, 3 minimum expected target of 2750. Okay. By the way, this seems to be a 3 and a 4. So even if you don't believe in that stuff, based on that, we would generally be looking at least for a target of 2444. But again, I do believe we end up overextending that through these higher targets up here. There's your gold. And gold's going. Look what silver's doing. Same kind of idea right here, except you got a 1 and a 2 here instead of 3 and a 4. Remember, silver is not at its all-time high. It's much lower here. But again, looks like we've got a 1 and a 2 here. And based on that, minimum expected wave 3 up there at 40,000 or 40,000, $40.99. Minimum expected wave 5 up here at $48.05. But that's not this 1, 2. That's interior here. So if you're looking at this 1 and 2, again, yeah, so 3 up there, closer to $81 on this larger 1, 2, 3 off the swing low, off the bear market low here in March of 2020. So yeah, I mean, a lot further upside for it. And, you know, whatever you want to think about, whatever kind of mental gymnastics you want to do about what this means for the economy and recessions and all this stuff, at the end of the day, this is what we're looking at. And if you are of the belief that Bitcoin is a better store of value, is a hedge against that kind of stuff happening, right? Recession and whatnot, you know, all these things you want to attribute to gold and silver. If you want to say that same way, then the idea that that a super cycle is coming in, especially when we're looking here at silver, I mean, yeah, quite possible, right? Silver's not hitting $81 or whatever here, you know, overnight. It's going to take a bit. Does that make sense? So anyway, okay, guys, listen. So that's what we're looking at. That's where I'm at. That's hopefully a better understanding of what's going on with Bitcoin and why a lot of stuff that people are talking online is nonsense or quite potentially nonsense. Again, nothing I've said here in terms of targets and movement is guaranteed. Okay. I'll never get up here and guarantee you that price is going to do A, B, or C, because that isn't how it works. I'm not omnipotent. I'm not omniscient. You know, I don't know everything. I don't have a crystal ball. But what I can say is, as I've shown you guys, especially over the last year and a half, where I've really started to kind of get out there, right? What I show you is that what I use works. The way that I look at the charts, the way that I look at the markets works. I've proven this over and over again. And so my goal here is to help share that a bit, to hopefully help you rein in your emotions a bit and get a better understanding of a lot of the things that most people aren't talking about out there because they don't understand. Whether it's, you know, the way in which ETF holders are likely to act, especially when you get to the ultra high net worth. You know, the way that those particular RIs that are handling that kind of wealth, you know, why they're not necessarily in this at the moment, you know, due diligence, at least 90 days, things like that. And how when they finally do come in, especially if we're seeing $100,000 coming up here by halving, they're going to get a lot of pressure from their clients to come in and put that money in. And so now you start seeing a very small bit. I mean, you know, we've talked about 1 or 3%, right, of these ultra high net worth individuals of their wealth coming in, right? But now we're looking at maybe like 5%. What about 8%? All of a sudden, things get kind of crazy. And so, you know, do we have a left translated cycle, or do we run into this kind of this adoption where we get the mainstream adoption coming up, and that gives us into more of this super cycle? That's, you know, that's yet to see. But I can, you know, I would, if I were you, the way I would look at this is always bank on the least crazy thing happening. And you can always adjust for the crazier thing happening in your mind, right? Too many times people want to get onto the most crazy idea and go like, oh my God, I want to focus on this big one, right? But if price doesn't get there, they continue to hold, even when they should get, you know, if they're trading, right, or shorter term holding, that they should get rid of it, you know, and lock in profits and get in lower. But if you always look at the least crazy thing first, with the potential and an understanding what that crazier thing is, then if it goes to do the crazy thing, you're already in. You're already running with it. But if it doesn't, you understand, you're already focused on the less crazy thing. And you're able to look for confirmations there to potentially, if you want to lock in profits, do so, get out and get back in at a lower price. Does that make sense, guys? So I'm not going to pretend I know what's going to happen here, guys. I don't. I've got two possibilities that I just talked about that I'm looking for. Left translated cycle probably means Q4, so end of the year cycle high. Or the second thing, which is potential super cycle. Okay. I don't know which one. I'm pretty sure it's one or the other. I'm not sure which one. But if we focus on the left translated cycle, which is the less crazy targets, right? The less crazy overextension, continuing to go thing, then even if it does the super cycle thing, we're still in it. We're in it. We're ready. But if it doesn't do the super cycle, then you're not waiting for that necessarily. You understand that left translated cycle could be where you're at. All right, guys, that makes sense? I appreciate you guys jumping in here as always, listening to me here, hopefully learning something. Again, guys, I'm one final time. I'm not here to get you emotional. I'm not here to blow smoke up your rear end. I'm not here to talk nonsense. I'm here to share what I've learned over the years, what works quite consistently. Again, if you've been following me for a year and a half, you've seen it extensively. If you've been following me since 2017, when I first kind of came out here on Twitter and whatnot, then you've seen it especially since then. But I hope it makes sense. If anything, even if you don't necessarily agree with me, I hope it just gives you something to think about. Okay? The last thing you want to do, especially if it is this super cycle thing, is to be unprepared. And get fearful and get out while it rallies. Get out. You're thinking, oh my God, it's 200,000 and oh wow, or 175,000. I need to get out. And then it rallies 3 or 4 times from there. I'm not saying it's going to. Please don't jump on me and say I'm going to, but I'm saying you don't want to be in that position because then you're scared to get back in. Your emotions take over. And as a human being, it's very difficult to get back in there. Now, we work on that a lot at TWC. The links are below the video, guys. We'd love to have you in there. Like I said, we've got open enrollment for our new subscription service, which is our community, which is our courses, charts, and community. And you can do that. Or if you want to really get in there and you want 3 group training sessions every week and everything else that comes with the group coaching, you can get in on a 3-month, a 6-month, or a 12-month with that. All the links are below here. I can't imagine that you would be unhappy with any of it. I've had 2 people since we started in 2017, 2 people that have been not happy, I guess. Neither one of them put the effort into it. Neither one of them showed up consistently. Neither one of them went through the courses consistently, didn't do anything. But that's it. In the hundreds and hundreds and hundreds of people we've had come through, 2 people. And that's why. Okay. So we'd love to have you in there. Our subscription service closes. The open enrollment closes on Sunday, guys. And then we'll only going to open it either quarterly or biannually. I haven't decided yet. So once it's closed, the next time it'll be open is 3 or 6 months from now to be able to get in on there in that monthly. Okay. Let me see here. Here's some guys that are in here. Diego, he's been in our group coaching. He says, just go ahead. You won't regret it. Matt's trades as well. He says, I've been in group coaching for a year now, and I now schedule my life around TWC because of the value I get every week. So this live is recorded. Yes, you'll find it here or you'll find it on YouTube, depending where you guys are looking at us. If you can jump, actually, you'll be able to get it on my timeline on X. So you can follow me there at TX West Capital. You'll also be able to find it here on YouTube, youtube.com/Texas West Capital. And you'll find it on there. Okay, guys? Oh, here's another one too. I love it. Best decision I ever made, says Mark on there as well. So as always, remember, the only thing you control, okay? The only thing you control is how much you lose. That's it, guys. Absolutely. So everything I teach you day in, day out, whether it's here or in, the group coaching, or that you learn through the C3 subscription or whatever, all of that is secondary to risk management. Okay? Because the only thing you control is how much you lose. That's it. There are no guarantees otherwise. All right? So there you go, guys. Thank you so much for showing up. Like I said, guys, hit the like button, subscribe, follow me, share the link. I would love if you guys could do that for me. Thank you so much. I hope y'all have an amazing weekend. Y'all trade safe out there. Oh, the only other thing I can give you, the other bit of advice I can give you guys is don't look to enter just because there's a chance. Don't go, oh, it might do this. Look at your chart, figure out, see, are there multiple areas of confluence happening there? That'll give you a higher confidence trade. It'll keep you out of a lot of the crappy trades you've probably been in over and over again. So that means you'll lose less money along the way. And more likely when you get into a trade, it'll be profitable and probably make more money than what you're averaging usually. Okay? All right, there. You guys take care. Have a great weekend. Hopefully I'll see you guys over TWC Trading Academy. All right? Thanks a lot. Take care.